to Socially Responsible Investing Podcast. This is episode 5. I'm Bill Holliday. I'm a fee-only financial planner with AIOfinancial.com, which specializes in socially responsible investing. Today I'd like to discuss 2 reports that came out last week. The U.S. Social Investment Forum, USSIF, their SRI Trends Report, and also the Calvert Foundation Impact Report. So let's start with the USSIF report. They do these trends reports in socially responsible investing about every 2 years. The last one was in 2010. In this one, the data was from 2011, the end of 2011, and the reporting now. Be aware that there's no single approach or motivation to these environmental, social, governance, investment strategies. So I think it's a little difficult to quantify or definitely, there's not one investment or one type of investment that you can count as SRI or ESG. And so these aren't going to be exact numbers, but they're saying more than 11% of all investment assets under professional management in the U.S., so that's 3.7 trillion out of 33 trillion at the end of 2011, were held by individuals, institutions, investment companies, money managers who consider ESG, that's environmental, social, governance issues in selecting investments. So that's up, that's a lot. I also, in reading the report, and I don't think we can put it on the website, you have to be a member to get it. I'll ask USSIF if they'll allow that, but I'm pretty sure I'll just summarize it. I'll link to their site. There's not just avoidance, but focusing on issues for the assets you own. And they also, the terminology, instead of SRI, they're using a lot of ESG. That's minor things, I guess. It's interesting, too. There's an increased investment in SRI over the last 2 years, about a 78% increase, a huge increase. At the same time, there's high unemployment, financial crisis, no legislative movement on climate change, concerns about the financial regulatory system, corporate political spending is going on without any disclosure. Inequality of income is huge and on the rise. So maybe that's partially the motivation for why people are looking at investments as a tool. It's just as one tool, one way to help move society in a positive direction. On the good side, there are a lot of new asset classes, new sectors, clean energy, clean technology, expansion in microfinance. There's many community investment options. And because of shareholder engagement, many corporations are embracing these ESG practices and disclosures. I think that's one of the first steps is just accomplishing disclosure. Who are you giving to politically? And what are your environmental sustainability issues, I guess. Sustainable investing have also engaged the federal regulations and legislations, and there are advances. So here's a couple numbers. 1,013 billion in funds invested using ESG factors, environmental, social, governance. 1.4 trillion ESG assets under management. 644 billion are in the mutual funds, exchange trade funds, closed-ended funds. 132 billion in alternative investments, and that's been on the rise. A lot more options in that arena as well. 234 billion in pooled products managed for institutional investors. 337 billion in separate accounts, so an advisor just managing individual stocks in a separate account. It's not a public, mutual fund, but it is meeting their clients' needs, considering these ESG issues. $61 billion in community investing. There's 1,043 community investing institutions, and consumer demand for community development banks are up 73% since 2010. So 1.4 trillion money manager ESG assets, then 2.7 trillion, almost double the amount, in assets administered by institutional investors involving ESG incorporation. And so that 2.7 trillion, a lot of that is public funds. 2 trillion public funds. Every state except for South Dakota and scores of cities and counties offer sustainable and responsible investing options as part of their defined contribution retirement and education savings plans. Most SRI offerings are provided through deferred compensation. A number of states offer SRI options in their 529 college savings programs. Top issues. Should we do that? I think that's probably good. Top issues that are, and then we'll get to community investing. Great. Top shareholder proposals. So based on the number of shareholder proposals, the top issues are political contributions, and primarily just disclosure. Not saying you have to contribute one way or another. Just tell us who you're contributing to. Environmental issues. Non-climate is number 2. They don't specify what other non-climate issues. I imagine the fracking or other types of pollution. Climate change, number 3. EEO, which is equal employment opportunity, number 4. Number 5, sustainable reporting. So reporting on your impacts or the company's impacts. I mentioned environmental impacts. Animal welfare, human rights, labor issues, non-EEO, non-equal employment opportunity. I don't see executive compensation on the top list of shareholder proposals. It's okay, but I'm a little surprised. Leading criteria by assets. So these investors, what are their biggest criteria? And top, avoidance of the Sudan, general governance, tobacco, alcohol, labor, weapons, gambling, climate change and carbon emissions, pornography, human rights, pollution, nuclear, green buildings, sustainable natural resources, and animal testing and welfare. 15% of these investments are using one single criteria, 36% use 2 to 4 criteria, and 49%, about half of them, use 5 or more criteria. So not just picking one of these. Community investing, let me just touch on this because I think it's important to define this. Community investing institutions, they're calling them CIIs, provide access to credit, credit, equity, capital, and basic banking products that these communities might otherwise lack in the United States and abroad. They provide financial services to low-income individuals and supply capital for businesses in vital community services such as affordable housing, childcare, education, and healthcare. In addition, supply badly needed capital in underserved neighborhoods, which may be in cities, rural areas, or on Indian reservations. Important services such as education, mentoring, technical support. They also build relationships between families, nonprofits, small businesses, and conventional financial institutions and markets. So a second factor, what's the first factor? The second factor that they're growing, I know there has been a push for moving money out of big banks into community investment, community banks. A second factor is that they've also received capital from the U.S. government as well as foundations and other institutions. They oppose predatory lending, offer an alternative to it. there are a lot of new ways to invest in community banks and microcredit institutions. I'm looking at the top issues for ESG criteria for exchange-traded funds, top issues clean technology, sustainable natural resources, agriculture, pollution, toxins, climate change, carbon, tobacco, other environmental, social, other, general governance, EEO, that equal employment opportunity, diversity, human rights, and board issues. Great. I would also like to touch on the Calvert Impact Report. So Calvert, this was a couple podcasts ago, I interviewed someone from Calvert Foundation. They give money, financing for microcredit institutions, providing finances to underserved communities here and abroad. They have distributed $215 million in investment, have been invested with their community notes. 7,200 investors, 400 brokerage firms. So pretty broad exposure. They work or provide financing in 80 countries. They have a 100% repayment rate. 208 borrowing institutions. And I know they're mostly looking at larger microcredit institutions. They also tout 90,507 patient visits, 50 million in affordable housing, 30 million to small businesses, 1,779 classroom seats created, 5,135 farms supported. Impressive numbers, lots of big numbers there. It would, and I think this is a difficult thing to do. It would be nice to see an impact. They're showing that they're getting a lot of money out there, and I guess the correlation is if money's going towards affordable housing, it's helping. It would be nice to see that. Have a control group, have their group that's getting financing, just show how their lives are different. That's probably asking a lot with all the different 208 borrowing institutions, which are probably evaluating their impact in different ways. But I think that would be helpful, just having a little bit more impact, or a little bit more information on the actual impact. But impressive numbers. They're getting a lot of money out, impacting a lot of communities. So I think that's all I wanted to touch on with these two reports. Let you know they're out there. Feel free to contact me if you want to. Well, let me check with USSIF, but the Calvert Impact Report is available on their website. Next podcast, we will be talking to someone from Iroquois Valley Farms, and they are an alternative investment in sustainable farming, organic farming, and we'll find out more about that next time. Thank you for listening to the Socially Responsible Investing Podcast. I'm Bill Holliday with AIOfinancial.com. Let me know what you think. I'd welcome suggestions, comments, questions. You can email me, bill@AIOfinancial.com, and call me 520-325-0769. Thank you.